Hello and welcome to Switzer Investing Insights, brought to you by NabTrade. Today, I want to look at the outlook for the share market in March. But before starting on March, let's just look back at what happened in a very interesting month of February. Might surprise many people that the Australian stock market actually edged up higher during the month, adding 1.1% in price terms and a bit more, almost 2% when dividends are taken into account. Year to date, we're still down, but that was a reasonably strong performance in the actual month of February, notwithstanding the challenges going on, particularly in the external environment with the Ukraine. And interestingly, also that the Australian market outperformed the US market over that period, which was down 3.1%. Turning to the sectors that make up the market, it's no surprise that really it's been the standouts of energy, materials, and to a lesser extent financials that have driven the market higher in March. Energy adding 8.6% to be up 17.1% year to date. The biggest sector on the market, financials, up which makes up 28.3%, added 3%, and that was really much on the back of really quite an impressive performance of reporting season outcomes from both the Commonwealth Bank and Suncorp, which actually helped the other shares, other companies in that sector as well. Year to date is still down 3.7%, but the money's been going into materials, energy, and financials, and they're the big sectors that make up our market. Of course, information technology down over 6.6% for the month, 23.8%. That's been the major drag, as has the consumer discretionary sector, which is down 13.3%. The other interesting one to highlight there is real estate, which despite being up in the month is still down. I actually think that's doing better than many would have expected. So what's in store, and I think the other comment I should make around when looking at the Australian share market is that the top 20, the top 50, they're all positive for the month. The small caps and the micro caps have been the underperformers. So what can we look forward to in March? Well, first of all, who knows what's going to happen in Ukraine, and and if that plays out, I guess, as most of the market hope, in other words, some sort of resolution is reached and we don't see further movement into the rest of Europe, and common sense prevails, that probably will go away as a factor for the market. But whether that's in March or April, I'm not sure. Obviously, if things get worse there, then it's going to impact our markets, and that's really the elephant in the room. If we look at more events that we know are going to happen in March, certainly we've got the big one coming in the US. The Federal Reserve meets on the 15th and 16th of March. We'll find out that decision on the morning of the 17th of March. The market's expecting 100% expecting interest rates to increase. Whether it's 0.25% or 0.5%, most of the market are going for 0.25%, but if it was 0.5%, that would change things. And we'll also get a guide as towards just how many more interest rate increases there are likely to be this year. So obviously, US market's going to be on Fed watch. We're going to have more concern about the inflation data, and potentially, given that 7 interest rate increases are already arguably factored in, any signs that maybe some of the inflation pressures are easing. In Australia, well, we're seeing lots of money will come back into the market as a function of some huge dividend payments that are going to be made in March. Now, whether this comes back to the share market or goes into cash, it's always hard to tell. But one thing is for sure, Australian companies, particularly the resource companies, really are paying out some whopping dividends. A lot of that money is likely to find its way back into the share market, and that's a positive. The other thing we have, of course, is our federal budget on Tuesday, the 29th of March. That's a pre-election budget. Budgets always mean, uncertainty for markets, but there could be some announcements there that have an influence on the market. So the market will be watching that carefully. So a lot of factors to play out in March, but my guess is that March is still going to see more good news than bad news. One thing that's worthwhile just reflecting when we think about the market in the long term is that despite what we've seen in Ukraine and the inflation pressures, both the US S&P 500 and the S&P ASX 200 are still in long-term uptrends. Now, we've seen the pullback. This is a chart that shows you the US, and it's almost come back to a so-called 300-day moving average. But while there are some negative short-term indicators, the long-term trends are still positive, and on that basis, I think you've got every reason to stay long both the Australian and the American markets. With my tip that the Australian market, like we saw in February, is likely to outperform the US market. That's our investment outlook for March. Thanks for watching Switzer Investing Insights, brought to you by NabTrade.